Hello friends, in this video we're going to discuss about the amendments in GST proposed through Finance Bill 2023. The first amendment that we would discuss is with regard to place of supply. Now, from 1st February 2019, there was a proviso which was brought for transportation of goods out of India. So if any person is transporting the goods, so the supplier is within India, the recipient is within India, but the destination of goods is outside India. In such a case, it was stated that the place of supply would be the destination of goods which is outside India. So even if the logistics company is in Delhi, the recipient is also in Delhi, still the POS would be considered as outside India if the goods are moving outside India. This was a genuine issue which was plaguing the industry because the ITC was called into question. For the recipient in Delhi, if IGST was charged and the place of supply was outside the home state, the ITC was called into question. Very recently, it was clarified that the ITC would be available in such a case. But having said this, since the Delhi government is not receiving the revenue for this, because the place of supply is outside India, whereas the recipient in Delhi is taking the credit out of the Delhi government. This was resulting in a loss to the Delhi state. For this, it has been now stated that place of supply would no longer be the destination of goods. Rather, it would be based on whether the supplier is, whether the recipient is registered or not. So the exporter, if he's registered, location would be the location of the exporter. If he's unregistered, then where the goods are handed over for transportation. So generally, the recipient who is exporting would never be unregistered. So it is always the location of the recipient which would be important. So he would be getting the ITC in his home state, and the tax would also be going to his home state. So this would remove the anomaly which was brought in through this proviso from 1st February 2019. Second, 17 subsection 3 talks about exempt supplies. So if my outward supply is both taxable and exempt, my ITC would be restricted to the portion of taxable supplies. To the extent of exempt supplies, I would have to reverse my ITC. Now it has been stated that exempt supply would also be including one supply which was not treated as exempt, which was supply of warehouse goods to any person before clearance for home consumption. So if I am supplying any warehouse, custom bonded warehouse goods, and the goods have not been cleared for home consumption, that means I'm importing the goods, and when the goods are lying in the custom bonded warehouse before filing the bill of entry, if I'm selling those goods, in that case, normally it was not treated as a supply. But for the purpose of ITC reversal, after this amendment, I would have to treat it as an exempt supply and make my reversal of ITC. Mind you, this will not impact high sea sales where the goods have been released from the port of origin and it is yet not entered my home country, which is, in such a case, ITC reversal is not required for high sea sales. Now, this is extremely important. For CSR activities, the question was, would ITC be available? See, for the CSR activities, there was no particular bar under the GST provisions for availment of ITC. But the department used to deny the ITC by treating it as gift. Mind you, this cannot be treated as gift because gift is without any obligation, without any statutory or contractual obligation. Whereas in this case, there is a clear obligation under the Companies Act. So ITC was to be treated as eligible earlier. But now, having realized this issue, the government has specifically inserted a provision that even if I am doing any CSR activities and under the relevant company law provision, still the ITC would be barred for me, right? So here, CSR is only applicable to certain group of companies which is having net worth of more than 500 crores, turnover of more than 1000 crores, net profit of more than 5 crores during the immediately preceding financial year. Such case, this would be applicable. So one can also take a view now that before this amendment gets notified, it is absolutely clear that ITC would be available on CSR related activities, because this amendment otherwise would not have come in had the ITC already been barred, right? So now the ITC is barred. For earlier period, ITC should be available based on this logic. Now, what they have done here is, for online information and database access retrieval services, they have changed certain definitions, right? For OIDAR services, they have changed the definition of non-taxable online recipient. Now, this is usually very important because we don't realize the importance of this particular provision. If I am an unregistered recipient, I am, let's say, buying any software from outside India, or Google Drive space and Google is billing from outside India, or any kind of online services I am taking, be it ad services or any online content. In such cases, if I am an unregistered person, I would not have to pay reverse charge. Supplier would have to take a registration and pay under forward charge. So here it has been stated that the person, if I am a person who is unregistered but I am carrying out business, still if I am importing any services from outside India, still I would not have to pay under reverse charge. So here they are saying, simply because I am an unregistered person and I am taking any services from outside India, I would not have to take a registration for OIDAR services. So this is a welcome move, because earlier only for other than business related cases the reverse charge was not applicable. Now reverse charge is not applicable even for business purposes if the recipient is unregistered. For unregistered recipient, they have also said even government who has taken registration for TDS would also be included. That's fine. Now this is very important. For OIDAR services, if I am taking any online services, the question which was always asked was whether it is falling within OIDAR in the first place or not. Now, there was a line which stated that OIDAR, what is the meaning of these services? It is basically meaning those services which is mediated by information technology over internet, and nature of which renders their supply automated and involving minimal human intervention. Now this was a very difficult line to satisfy. Let's continue. And impossible to ensure in absence of IT, information technology. Now normally if I am, let's say, taking any services from a tutor online, normally that tutor physically comes and teaches me, right? That means even online he is physically coming and teaching me online. Let's say if he is giving me a live class. So here they are saying there's a possible human intervention involved. So in such a case, it will not be treated as OIDAR. Whereas if the teacher's classes are recorded, that means that there is no human intervention. The teacher does not have to come and teach again for a recorded class. So in such case, it is automated. In such case, it was OIDAR. Now they have removed this line because this was very subjective. What is minimal human intervention? How much do we call as minimum, or how much do we call as maximum human intervention? So here they have made it very simple that any supply which is provided online and it is impossible to be provided without IT, in such cases it would be OIDAR. So whether human intervention is minimum or maximum, or is it automated, is something which is absolutely immaterial from now onwards after this definition has been changed. Next, registration, very important provision. Section 22 talks about turnover based registration. Section 23 talks about exemption from registration. Section 24 talks about compulsory registration. The issue here is that Section 23, which talks about exemption from registration, did not before this amendment have any overriding effect over 22 or 24. That means if I am exempt under 23, whereas I am supposed to register as per 22 and 24, the question came in, which provision will prevail? For instance, if I am liable to pay under reverse charge, I have taken the services of a person, of an advocate, and I am supposed to pay under reverse charge. But I am an unregistered person because my outward supply is wholly exempt. So in such case, I am falling in the 23 also, which is my outward supply is wholly exempt. I am falling within 24 also because I am taking services under reverse charge. In such case, whether I am liable to take registration, there was a huge tussle between the assessee and the department. Now it has been clarified. 23, that means exemption for registration will prevail over provisions for registration. So if I'm exempt under 23, no matter whatever is written under 22 or 24, whether I'm falling in 22 or 24 does not matter. I will not be required to take any registration. Alright. Next is GSTR 1 3B99C GSTR 8. Till now there is no outer time limit for filing of this. That means there is no last date. I can always file with late fees, interest, whatever liability is there. I can make the payment of that, and I can make the payment of late fees and even file the return of 2017-18 if I want. But now they are proposing that there would be an outer time limit of 3 years maximum. Beyond 3 years from the due date of annual return, I would not be allowed to file my returns anymore. So my returns itself would be blocked. I will not be able to file that anymore, right? For certain category of taxpayers, they can extend that time limit. Maybe persons which are under liquidation or under the process of insolvency, maybe those category of people might be exempted from this time limit. Next, provisional input tax credit. As of now, provisional input tax credit concept, which was prevailing in the GST law, was removed from Finance Act 2022. So there is no concept of provisional ITC anymore. Earlier, the provisional IT concept was basically if there was matching of ITC, and until the recipient accepts that ITC in his GSTR 2, that would be treated as provisional in nature, right? Now it has been stated, no, there is no concept of provisional ITC. GSTR 2 was not brought in, so whatever ITC is taken, that is final ITC. Now they had removed the concept of provisional ITC from all the relevant provisions of the law. In the refund chapter, they had not removed this provisional ITC. So now the refund, which is supposed to be 90%, which is supposed to be paid to me if I file the refund, the department used to state that since your ITC is provisional in nature, we will not give you refund. So here, this is something which is a welcome move. By removing this particular line which is marked in red, we can now get provisional refund from the department if I file my refund for 90%, and there is no concept of provisional ITC anymore. Next, I'm sure we all have faced this issue that department has delayed in giving us the refund, but whenever we go to ask them for interest, they would never provide that, and we would have to go for litigation. So now what they are saying, that refund provision for delayed refund would also be given under the rules. That means there would be a mechanism of computation of interest on delayed refund, which would be provided through the rules, which basically would be for the purpose that department should be able to take a stand of giving the refund on a regular basis. We are hopeful that after this, once they give this mechanism as to how do we calculate the refund, they would be giving us the refund. Having said this, even if the calculation mechanism is not there, the interest is still a right if the refund is not paid within 60 days to the assessee. Now, high C sales, merchant trading sales, where I'm selling the goods before the goods enter India. That means I'm setting in India without the goods entering India. I'm selling from, let's say, Bangladesh to Nepal. Or the goods have not been cleared for home consumption. It is sitting in the custom bonded warehouse. I have sold it before filing bill of entry. Or the goods are in the high seas. I have sold those goods before they have come to the clearance for home consumption. In such cases, it was stated it would be neither treated as supply of goods nor supply of services. But this amendment had come from February 19. So before this date, the department used to impose a liability on such kind of supplies. So now it has been stated that this is going to be retrospective, and this would not be treated as supply right from 1st July 17. Decriminalization of certain offences and increase of monetary limit for prosecution. Now, number of offences have now been decriminalized, which earlier were criminal, which earlier involved prosecution. Now these offences will no longer involve prosecution. The penalty might be there, but the prosecution will not take place. That means obstruction of an officer in discharge of his duties, tampering with or destroying any evidence, failure to supply any information or supplying false information. Limit for prosecution has now been increased from 1 crore to 2 crores for most of the offences. So earlier, even for 1 crore related offences, I could face prosecution. Now for most of the offences, the minimum limit where I could face prosecution is 2 crores. Only for one offence, that means if I'm supplying fake invoice without supply of goods or services, then the limit still stands to be 1 crore. Other than that, it is now 2 crores. Now, if I was supplying goods through e-commerce operator like Amazon, Flipkart, I could not opt for composition scheme. So a small taxpayer who is supplying through any e-commerce platform, they could not opt for composition scheme. Now it has been stated, yes, they can go for the composition scheme. If they are manufacturer, then the rate would be 2%. For trader, the rate would be 1%. For anyone who is providing services beyond a certain limit and is not eligible for the old composition scheme, there is a new composition scheme for service providers for which the rate would be 6%. Right? So they can opt for any of these schemes. Obviously, if they would fall under the old scheme, they would go for that. Otherwise, if they are not falling within the old scheme, then 6% would be applicable under the new scheme. Next, if I'm not making payment to the supplier within 180 days, we know that ITC reversal is required along with interest. Now, the GST law stated that this would be added to the output tax liability, rather than stating that this would be there would be an ITC reversal for this. So this was a lacuna in the law. Though in the rules it was corrected 3 months back, in October 2022 this was corrected. In the Act, the correction has now been made that there would be an ITC reversal. So even the interest provisions would be that for ITC reversal. That means 50 subsection 3, which is for ITC reversal, and not 50 subsection 1, which is for output taxes. So this will be treated as ITC reversal and not output taxes. Further, if I'm making payment to the supplier, in that case, I would be allowed to re-avail the credit without any time limit. So here the word to the supplier was missing. They have inserted the word to the supplier. So in other words, if I'm making the payment to the supplier after that time limit of 180 days, I can still avail the ITC. By to the supplier, we have to understand and wait for the implications, because when we make payment, let's say to rent control and not to the landlord, whether ITC would be denied to me in such cases, because I'm not making direct payment to the supplier, or I'm making to any person on behalf of the supplier. In such cases, would ITC be denied to me? Is something that we have to wait and watch, because that is something we have to see why the word to the supplier has been inserted. To my mind, if I'm making any payment to any person on behalf of the supplier, ITC would still be eligible, because it would tantamount to payment to the supplier itself. But we hope that the department does not litigate this. Next, for e-commerce operators, now a responsibility has been cast on the e-commerce operator. So any website which is allowing others to supply through that website. So if I want to register on Amazon, Flipkart and make supplies through it, ideally Amazon and Flipkart are supposed to check my background. If I am an unregistered person, I will not be allowed to supply through e-commerce operator, right? So in such cases, if I am supplying through e-commerce operator and they do not take any action, then the penalty would be applicable on the e-commerce operator. Next, any e-commerce operator who allows an interstate supply of goods or services, or both, though they are not allowed to make interstate supply. So if I am a composition dealer, I cannot make interstate supply. Now I am supplying goods through e-commerce operator. The responsibility is now cast on the e-commerce operator that they cannot list my product in any other state, because I cannot make interstate supply. Also, they have to furnish their return in GSTR 8. If they fail to furnish the details of the supplier properly in GSTR 8 and all these kind of supplies which have been contravened in GSTR 8, in such case there would be a penalty of 10,000 or tax amount whichever is higher. Right? So this is a huge responsibility now cast on the e-commerce operator. Next, for compounding of offences, it has been stated that irrespective of the amount, now if the goods are liable for confiscation or services which are provided in contravention of the provisions, earlier there was a limit of 1 crore rupees for applying compounding. Now without any limit, the compounding can be applied for. So limit of 1 crore has now been removed. Also, this is a very big important aspect, because normally for compounding we do not find a lot of people opting for it, because if a person is prosecuted under, let's say, a different law, IPC, CRPC, then he could not apply for compounding under GST. Now this restriction has been removed. So if a person is being prosecuted under any other law also, he can still apply for compounding and get relief from all laws. So basically this is a very big amendment. Now a lot of people might go for compounding if they are being prosecuted. Having said this, a person who is making fake invoicing without actual supply of goods or services, they would no longer be allowed to go for compounding. So this also restricts the scope of compounding to a great extent. Now the scope of compounding, the minimum amount and maximum amount, a lot of cases people did not go for compounding because of the higher amount of compounding amount involved. So the compounding earlier was 50% of tax involved, or 10,000, whichever is higher. Now it has become 25%. Also, the maximum limit which can be prescribed was 150%, which has now been reduced to 100%. Now, this is a new provision which has been inserted, for which we have to see as to why this has been inserted. But the idea is that GST portal is now wanting to share information with other portals or other systems. Which systems is something which we have to see. They are saying that the information will be shared with other systems only and only after taking permission from the supplier. And if the recipient's data is there, then the permission from the recipient would also be taken, right? So the conditions which are there, which information which can be shared is for application of registration or GSTR 1, GSTR 3B, GSTR 9, GSTR 9C, e-way bill, e-invoices uploaded. All these information GST portal can share with other persons, but they would have to take consent of the taxpayer. So the basic idea is that if they share that information, they want to safeguard themselves that there is no proceedings against them tomorrow, right? But we have to see which kind of portals they want to actually share information with. So we come to the end of this video. I'm sure we have this video would have done some value addition for anyone who wants to understand the implications which have taken in GST because of the amendments which have been proposed through Finance Bill 2023. So thank you so much for giving me a very patient hearing.